Hey all, welcome to Share Trek. This is Raj here. And friends, I'm really happy to have Sandeep with me today to talk about Airbnb. Hi, Sandeep.
Hey Raj, here's Share Trek Friendos. Happy to be here.
Yeah. So today, Sandeep has got some interesting concept for us that he's going to talk about, which explains why Airbnb was a success. And that concept, I think we can always use when we look at any new company that is coming in a new field. So with that said, I think it's time for us to get started. Hey all, welcome back. So as I said before, today our topic is Airbnb and we have Sandeep with us. Hey Sandeep. So
Hey
I think I'll
Raj.
hand over the show to you. You can get started and educate us about Airbnb and your financial analysis on that.
Perfect. Hey Share Trek Friendos, happy to be here. Happy to be back again after a little short 1 week time off, but more time to get to know some of these great companies. Today we're talking about a company, a software company called Airbnb. It's a company I'm sure most of the Share Trek friends have heard of. Some of them even indulged in and tried for whatever reason, whether it be for leisure, for an alternative to hotels, for however many reasons. And this company is a very, very interesting company. It's a company, if I were to kind of summarize one word after reading its financial statements, looking at its financial ratios, and looking to the company as a whole and its business model, I would say intelligence. It's a very, very smart company. But before I get into what the company does, I want to highlight a little bit onto what I believe the company's strategy is. A lot of people have been talking about some great books, some great literature. And one book a lot of people highlight is called Blue Ocean Strategy. Personally, I haven't read that book, but I did read the book called Zero to One by Peter Thiel, which highlights the importance of having somewhat of a monopoly on an industry and how that can really impact revenues and really impact a business. Airbnb is one of those companies. Now, I made a little diagram over here. I hope you could see it quite well. So I'd like to highlight a couple of things, which is the red ocean strategy and the blue ocean strategy. So the red ocean strategy is something where it involves an existing industry, existing markets, and it's got well-defined boundaries. It's everybody knows what's going on in the industry. There's lots of people in that industry, lots of rivals, lots of fierce competition, and it's a low margin industry. Think of it kind of like there's an ocean, there's lots of boats, everyone's competing for the same amount of fish, and the larger ones take the lion's share. Slowly, some of these just start dying off and being eaten by some of the other boats. An example of this might be some of the airlines, some of the rideshare companies, even some of the companies like restaurants. And you can even think of some of our viewers in India and other places, some of the Indian markets or Chinese markets where everyone is just trying to undercut one another. And then we got the industry, which is the blue ocean industry. And that's where I feel Airbnb belongs. So look at it. It's a ship over here. It's got the Airbnb flag. There is barely any competition competing for the fish. Now, Airbnb can get all the fish it likes. Some things so you'll have to pardon my handwriting. Some things that are quite common in that industry is that the people in this industry create and capture new markets or unknown markets, kind of like Airbnb. We didn't know we needed the software of Airbnb until it came up. It creates its own demand and it disrupts other industries. And think about the Airbnb industry. Think about the blue ocean industry, which is a concept that was coined by W. Chan Kim and Renee Morbogane, pardon my pronunciation. It is companies in the blue ocean usually have a shelf life of 10 to 15 years between when new, and I got a little sailboat coming in here, come in and have the resources and jump in and disrupt that industry. An example of this is just last week, we got word that Amazon is launching low orbit satellites into space, which is before an industry which Starlink had a monopoly over, and Starlink could charge whatever they wanted, and their speeds could be whatever they wanted. Now we've got a new player up there, which is going to be great for consumers because now Starlink has a competitor in Amazon, a very well capitalized competitor, which is going to bring down costs and increase the quality. Airbnb would probably get a competitor one day. We don't know when that is. So if I, just like we did last week when we were talking about Unity, I have looked at what I believe are some of the important ratios of Airbnb. And now, remember when I was talking about Airbnb and its intelligence? We are in a high interest rate environment. And in a high interest rate environment, your debt seems to cost much, much more. And that's something that we saw when we were exploring Pfizer and we were exploring Unity last time. Their debt becomes much more expensive in high interest rate environment. However, if you take a look at something over here in Airbnb, although their debt is going up a little bit, it's actually coming down in recent quarters. Although their short-term debt did kind of peak in the last quarter of last year, it's come down significantly. Same with their long-term debt. And the interest that they're paying on their cash, they began to pay it off as early as 2022 when the interest rates started to rise. And since then, their interest expense, despite the increasing interest rates, has been coming down. This industry, this company realizes that, hey, we're going to be paying a lot more of our cash in debt. Let's start paying down our debt now. And you can see that over here, their free cash flow, they have come down in recent years, but they have deployed that cash into paying down their debt, which in turn might be actually beneficial to the company. We could take a look at some of the things over here. By the way, this tab over here is today's most recent ratios and what the future projected is. Price to earnings ratio, when they first debuted, they were trading very, very richly. And now it's come down much more reasonably. Compared to its historic PE, it's actually trading much more fairly. Price to book ratio, it's coming down. It's trading much more fairly. And tangible book, so the difference between price to book and price to tangible book is tangible book takes out some of those non-tangible things that you would include in a balance sheet. Things like goodwill, things like patents, things that you can't actually physically have. So a lot of people think that price to tangible book is the real PB ratio. Price to sales, it's looking much more attractive. Price to cash flow, I could keep going down the list. But one thing over here that I will highlight is when we were taking a look at Pfizer, we brought up that enterprise value is the value of all of their bonds and their debt, whereas market cap is the value of all of their equity. Their equity is greater than their enterprise value, meaning that this company has less debt and less bond debt. And this is something that the growth investors are very, very interested in, which is their profit margins. despite the increased interest rate environment, their profit margin is actually climbing quite steadily. Their net income margin is their margin minus all of their input costs, minus their cost of goods sold and so on. And they're standing pretty fairly at about a 25.2, which means for every dollar that they have coming in, the company nets about 25.2. We could go even further here and introduce the concept of sustainable growth rate. What this means is if the company were to utilize and become the most efficient without taking on new debt or diluting shares, what is the most growth rate that they can expect? And based off their current financial health and position, they can expect a growth rate year over year of about 44.65 if they were to be absolutely maximum efficient without taking on any debt. Free cash flow, a lot of my accounting friends would love to see that they are very well capitalized and very well financialized for their future operations. And the last thing that I'll bring up before we jump into some other parts and other aspects I really liked about Airbnb is you can see that their cash ratio, their current ratio, and their quick ratio, which is their short-term means to meet their debt, has come down in recent years. But that is, I believe, because they have deployed so much of their cash to paying down their debt, which is actually can be considered a good thing. Their debt ratio, total debt to total equity, has been remaining quite steady, and their cash flow to liabilities is actually coming down, which means that although their liabilities keep going up, their cash flow is able to meet some of those things. And as we have been talking about intelligence, each company has a credit line. Now, the more the company grows, the greater their credit line can grow. As you can see before, back in 2022, Airbnb was only approved for about a 500, I believe this is 500 billion credit line. Correct me if I'm wrong, pardon me.
Million.
Now, yes, correct. And now it's doubled. But the use of that credit line has actually declined. And the amount of times they have drawn down on this credit line has actually declined, showing that this company is paying down its debt. It's keeping itself well prepared for in the event that the company were to need that cash. It's not gonna it's gonna have that cash available, and it's not using it for high interest payments. Airbnb has been in the news recently because the company did enter the S&P 500 on the 18th of September, and that announcement was actually made around the 1st of September. And we can see that the wonderful, efficient market that it is, each of these candles, there's about 1 day candle. As soon as that announcement was made, all these funds started gobbling up shares, started gobbling up a whole bunch of Airbnb stock. And when the 18th actually came and it got added into the S&P, we started to see a great big decline in share price. And why is that? Why was that? I went through and I took a look at Airbnb. The company is seeing a lot of insider selling, and the CEO is selling millions of shares. I don't quite know why that is, but it could be a lot of these companies, as Raj has indicated in some of our genomics companies, people have pre-made selling plans, and they have already planned to sell these ahead of time. Airbnb is a very well-capitalized stock, and is a very, very intelligent stock. However, it's not doing so well as of recently. If we were to inquire why and look through some of their earnings, they did do a buyback of shares. However, they also diluted their shares at the same time. When the CEO was asked about that in the earnings call, he said that the reason why he did that was he needed cash, but he felt that the two offset each other. So it's almost like nothing happened. And when the CEO was asked about certain things like inflation, about macro, didn't think that was a factor at all. In fact, the term inflation and the term macro and slowing and rates were only discussed one time each, and that was when someone asked. Airbnb doesn't think that inflation is going to be an issue. Actually, in their earnings, they think that booking activity is incredibly robust and occupancy rates are very high. And the company says it is outperforming hotels. It also says that it believes that considering its 18% year-over-year growth in booking services, it's going to continue growing. And it believes that there is a huge market opportunity in countries such as Germany and Brazil. Revenue growth of 18% year over year and free strong cash flow of 43%. Considering the $2.5 billion stock buyback and the dilution of shares canceling each other out, the company doesn't see too much change. However, it sees a lot of growth. It doesn't think the student loan forgiveness is going to impact this company's guidance. And it says the average price per room is actually $67 per night, which beats your traditional hotel average rate. Now, if we were to go back and take a look at the wonderful little growth thing we have over here, I went ahead and input Airbnb, which is trading about $125 a share. The expected end of the year EPS is 3.55. We get a PE of 39%, which is actually lower than its recent price performances, which if we were to take a look at the EPS growth, it gives us about a 22% expected EPS growth, a PEG ratio of 1.8%. However, I went out and I took a look at how their EPS is growing, and I estimate that it's actually expected to grow about 27%, which gives us a much more favorable PEG ratio. Now, this company is trading kind of rich right now, looking at their PE. However, it might be trading a little bit too rich for some people. And myself, I might be one of those people which think, hey, this company is growing and this company does have a blue ocean. However, how long is that going to last? How long is it going to continue to outperform? Sure, it's beaten every single quarter since Q2 of 2021. However, can it still keep going like this? Can it still keep delivering these lavish estimates? And that's something which we got to take a look at. But the company is in the S&P 500. And if it were to have a much more attractive PE, considering those growth rates, maybe it's a very entertaining and attractive stock. But I'd like to bring Raj back in here and hear his insight on Airbnb. I know he is in the rental market and knows a little bit much more about real estate than I. So I'd like to hear his thoughts.
Yeah, I don't think I have much thoughts on Airbnb, but overall, it's very interesting to note that they are not worried about interest rates and inflation and all that. So that's very interesting. But I would think that there are risks for companies like Airbnb, which could be positives for genomic companies, which I spoke in my last video. I think if we have another wave of COVID, right? So if there is another wave of COVID and there are restrictions on travel, and if mask usage has starts again, then we might see problems for Airbnb. Airbnb definitely had problems during COVID. There are in Toronto itself, there was an entire building in Yorkville, which is a very upmarket place in Toronto, where all the film festival folks and all come there. So that whole building was for Airbnb. And during COVID, what happened was most of the Airbnb owners there, they sold their condos because they were mortgaged and they couldn't carry it along with the property taxes and other costs. So suddenly that also pushed the Toronto property market down. And the other problem, I'm speaking from a Toronto perspective because I don't know what's happening in the United States. But the other problem in Toronto is most of the condos have prohibited Airbnb usage. And there are some condos that allow that, and some are specifically just for Airbnb. But most of the Airbnb happens in private residences, where the city allows a maximum of 6 months of Airbnb activity in a home where the owner lives. So there is a lot of restriction that has been put in Toronto in order to make sure that rental property is available for the general public. And also there's the hotel lobby, which doesn't like Airbnb as much. So from a real estate perspective, when I look at it, those are the things I think about. However, in Toronto, there's a special market for Airbnb when new immigrants come to Canada. They do not know when they are going to get their first rental property. They do not know when they're going to get the job. So they come with enough money to last them for 6 months or 4 months, depending on how financially sound they are. And when they land here, they don't go to hotels in general. They always book an Airbnb. And that is usually booked for a month or 2 months in advance, so that they don't have to fear not having a roof over their head. And typically those immigrants come with wife and children. So it's a much more steady kind of business. And also you have international students coming in. If they are not able to clinch a unit, rental unit in, together, like 4 or 5 students getting together, then they also end up with Airbnb for the initial month or so. So that market, I think, is probably unique to Toronto because we are immigrant-oriented country and city. So that's all I have to add. But personally, I think Airbnb is definitely going to get a competitor very soon. I think it must be in the works. I'm surprised that it's not yet there. Maybe I'm missing something somewhere. But like Uber, for example, Uber was the early, and then we had a whole lot of other copycat kind of business models coming in, and everybody's doing the same. So then Uber has to go into food delivery, and now they're talking about picking up grocery for you from your grocery store or things like that. So those are the kind of things that, as you said, it's going to become a red ocean very soon for the Uber area. And I think Airbnb also is probably looking at that, because if Airbnb hosts find another company which is going to give them better terms, they would switch to the other, and they will try to operate with both Airbnb and with the other company. And so those kind of dynamics might happen. So in my mind, as you said, I think I agree with you. Probably anytime soon, it's going to have challengers coming in and the margins are likely to go down. So would I get into Airbnb right now? I don't think so. I made the mistake of getting into Uber recently, and it has fallen 6% since I got in. So I'm not repeating the mistake. So yeah, that's what I have with me, Sandeep. Is there anything else you have for us, or that was your...
You just sparked a very, very interesting conversation, which I would really like to hear all of our viewers' thoughts about what they think the Airbnb industry is like in their particular area, because there's a lot of government and regulation factors.
Yes.
And there's not a lot of loyalty, kind of like streaming services where you're not a diehard Netflix or Disney or Amazon Prime person. You just go to whatever you like.
Yeah.
So that's a very interesting thing to consider. I didn't think about that. Thank you for bringing that up, Raj.
Yeah. So I think our audience might have enjoyed this presentation that we had. So thanks a lot, Sandeep, for doing again the hard work of going through the financials and bringing us the red ocean and the blue ocean concepts. Yeah. So it's very interesting, and it's like something fresh for our channel, because every time it's just me talking here. So whenever you come here, I'm always happy, Sandeep, and I hope our audience also finds the freshness of a new approach coming in. So with that, my friends, I would like to say that we are at the end of this video. I hope you liked our video. And if you are not yet subscribed, please subscribe. And if you're already subscribed, please consider becoming a member. We are very close to 5,000 subscribers. I really thank each and every one of you and all our members who have been supporting our channel. Thanks and have a great day. Bye for now.
Bye.